Hello, everybody. So, we're going to be jumping into probably one of my most requested questions that I get asked all the time. Remember, if you're new here, please hit that subscribe button. It really does help me out. I'm on a journey to 100,000. Don't know how long it's going to take me to get there, but I'm going to get there. So, that being said, this question I get asked all the time. People always say, Stu, I'm really confused on the closing statement. What would be a debit to the buyer, credit to the buyer, debit to the seller, credit to the seller? So, what we're first going to do is this. We're going to start with what's going to be a debit to the buyer. Now, that doesn't necessarily mean that we're going to just make it a credit to the seller on the other side. Nay, don't think that. Don't think that if you do one to one side that you're automatically going to do the opposite to the other. It is not necessarily like that. So, when we're looking at debits and credits, let's first identify what a debit is and what a credit is. So I'm going to put a post-it note up here. So a debit is money that you owe, right? Think of your debit card, right? When we say, hey, I'm paying with my debit card, right? That's going to be a debit. And then a credit is money owed to you. Now, there are various different situations that could create a debit or a credit. And what we're going to be doing here is we're going to be looking at typically, generally speaking, what are going to be debits to a buyer, debits to a seller, credits to a buyer, credits to a seller. Now, could there be other things in there? Sure, absolutely. But what I am also going to do is I'm going to put a link down below for you to be able to get a quick cheat sheet. So in the description, I'm going to put a link for a cheat sheet to this where basically you can have that as a study tool, and that is free to use. So basically just give me a little bit of information about you so that I can tell you about anything that I have upcoming, and I'll have that down in the description below. So let's get started with debits to the buyer. So these are things that the buyer would owe. So the very first thing, and I'm going to go through and actually mark it off with my pen so that you know that I've already spoken about that if you're watching the video. So the first thing is the purchase price. Now, the purchase price is basically, if we were talking about debits and credits, the simplest closing would be debit the buyer the purchase price and credit the seller the purchase price. That's literally would be the simplest closing known to man. But we don't live in the simplest world, so that's something that you'll likely never, ever, ever see. Now, let's talk about something else that's almost a no brainer. So, most mortgages and other documents like your deeds, they're going to have to be recorded. Well, actually, let me rephrase that. They're going to be recorded. Things like deed, mortgage, they actually don't have to be, but it's just it would be silly to not, and they're going to be recorded, and that's going to be the responsibility of the purchaser. Okay, so that's going to be a debit. That's going to be a fee that is going to be a burden on them, but not anyone else. And also too, those fees are going to be used to pay the town clerk, things like that. So basically, that's not going to be something that's even going to show up as a blip on the seller's closing disclosure. So keep that in mind. Same thing with loan origination fees. Hey, if you're taking out a loan in any manner, shape, or form, what happens is if there is a loan origination fee associated with it, you are going to owe that money. Now, along with that, title insurance, inspection fees, kind of similar to loan origination fees, right? If you have any kind of appraisal that has to go along with the loan, I'm just kind of getting a little granular with you as to some things that are going to show up that would just be like, oh, that is a debit to the buyer. The buyer is going to owe that. So these are basically fees that are incurred through the process of purchasing a home. Credit report fee. Yeah, if your lender's charging that, which some do, some don't. Okay. Prepaid interest. If your lender's requiring any kind of prepaid interest to be put into escrow, okay, that is going to be something that would be owed. Now, homeowners insurance. Yeah, that's something that the buyer would definitely owe. Mortgage insurance, if it's needed, Yeah, that's another thing that could be shown up as a debit to the buyer at closing. And then I put property taxes. So there's two ways that the buyer might be responsible for property taxes. The first would be if the seller's paid in advance, right? So like they paid for the whole calendar year. So what this look like a calendar year, they paid for the whole thing on January 1st all the way till the end. Well, whenever the closing is, the buyer's going to take responsibility for that time. So that's a very simplified way of looking at prorations right there. They're going to take over for that time that they're going to be in the property from day of closing till the end of the year. So the buyer's responsible for property taxes there, or if they have to put some money into escrow, right, or into a reserve account for the lender, which they will if they're taking out a loan, right? So this is all going to be our debits to a buyer, and I hope that helped you out. I'm going to switch screens, so give me 2 seconds. All right. Debits to the seller. Now, there's not many debits to the seller that we usually have on the closing disclosure because, again, a lot of the fees are all going to usually be associated with the buyer. So in this situation, there's just a couple of things that they're typically, generally speaking, going to be responsible for. The first one is any transfer taxes. Now, your state may vary. However, the seller is usually responsible for those transfer taxes. And those fees vary as to what they are and how much they would owe. But when we're talking about debits to the seller, okay, it's a situation where, transfer taxes is going to be one of the top ones. The next one is agent commission. Now, with the NAR lawsuits going on and the commission lawsuits, I don't want to say definitively that it's always going to be on the seller side, but for your real estate exam, I'm going to err on saying to you that they're typically going to always assume that the seller is paying the agent commission, because I haven't seen anyone really uh, change it that much, or really say that they're going to change their question wording when I speak to authors. So yeah, I'm going to put agent commission as a debit to the seller, typically, generally speaking. Okay. Title search fees. So this is different than title insurance. This is basically when they're pulling the chain of title, the abstract of title. Those are going to be things that are going to be incurred by the seller. The seller is going to have to pay those. Okay. Any unpaid property taxes. So if it's basically sold in arrears, and I'm actually going to put this, I'm going to exit that, because really, if it's an unpaid property tax, they'll owe it, right? So if the property taxes are paid in arrears, meaning, and I'll get my handy dandy, timeline up, meaning that if this is a year, right, and it's going to be paid on 12/31, and for the year that just happened, well, the buyer is going to be responsible for the full year on December 31st. But what happens is we're going to make an adjustment at closing and say, hey, Mr. Seller, okay, from January 1st till the closing date, you're going to be debited at closing. So we're going to debit the seller for any unpaid property taxes that they would have owed for the portion of time that they're in the property. The other thing that is going to be a debit to the seller is if there's a loan or a mortgage that needs to be paid off. Now, that's not necessarily always the case. I think that you're going to see in real life, it's going to be more often than not now, people are going to be looking for assumable loans and being able to take over a loan that might have a lower interest rate. So existing loan payoff would be something, as long as it's not being assumed or taken over by the purchaser, then they would have to make some sort of payoff there. So let's clean this up and get to a new screen. All right. Credits typically owed to the buyer. Now, I'm going to make a couple points here, okay? Earnest money is always, always, always a credit to the buyer at closing. Why? Because they've already put that money up. So they don't have to bring that to the closing table. So earnest money, check that box off. Absolutely, they don't need that at all. What about the loan amount? Any loan assumed, taken over, subject to. I don't care what the loan is, whether it's originated or it's staying put, like it was originally originated at another time and it's staying on the property. That is going to offset what the buyer owes, which is the total sale price at closing, right? Of course, if there are any property taxes that have been paid in advance, the buyer is going to have to pay for their portion of it, which the seller has already covered. And it's a situation where also, so we're talking credits here. So let me correct myself real quick, okay? Because I'm doing this on the fly for all of you. So that would be a debit if it was something that they owed, but it's a situation where property taxes also works the other way. So if it was paid in arrears, right? If it's paid in arrears, meaning that the buyer's going to owe it on December 31st and the seller hasn't paid anything, that's going to be a credit to them. Okay. The seller's going to owe them that. So that's something that could show up as a credit. The next one is any kind of agreed upon concessions, credits, or anything like that. Let's say maybe the carpets have not been cleaned in 101 years. And the seller's like, listen, I'm not going to clean the carpets. I'm also, because they might want to put their own new flooring down. So I'll give them a credit in the amount of X for recognizing that that's the condition that they're in, right? So basically what they're going to do is they're going to say, hey, whatever condition the carpets are in, we're going to give you $2,000 that we would have spent on cleaning it, and you could apply that to whatever you want. So that's an example there of a seller credit or concession, and there could be a bunch of different things. I mean, so you could basically take your mind down that rabbit hole a little bit, for a lot of different situations. So let me change my screen up. The last one, we're going to do credits to the seller. All right. Let's wrap it up with credits to the seller. So the first one, kind of an obvious one, is the sale price, right? The sale price is, I mean, that is, as I told you, the simplest closing in the world is debit the buyer the sale price, credit the seller, right? Um, the next thing I want to talk about is prepaid items. What do I mean by prepaid items? So property taxes, if they've been prepaid. Also, if there's any kind of homeowners insurance, I mean, home HOA fees, things like that. If there are things that are going to eventually be the responsibility of the buyer, and these have been paid in advance, well, then that's going to be a credit to the seller. That's going to be a credit to the seller. And along those same lines, if they've paid property taxes in advance, then they are going to also be credited for the portion of time that the buyer is in the property. So, with that being said, I hope this helped you. Remember, click the description down below. I'm going to have a link there that's going to have the credits and debits to it. It's going to be something that you could easily, find that PDF. I just want a couple of things from you so that if there's something that comes up in the future, I could reach out to you, stuff like that, and also send you any of my other guides. So, that being said, everyone, listen, have a great, wonderful, fantastic rest of your day. I'm going to see you all real soon.